Alex, getting a few more details now about what this IPO and at least the financials are going to contain. Talk us through it.
And you'll remember this isn't actually an IPO, it's just a direct listing. So Spotify is taking this unique means to get to public markets by just listing the stock, and they just dropped their registration statement. And the top line numbers here that caught my eye, if I'm looking at revenue, they came in at about 4 billion euros in revenue last year. That's about $5 billion US. That was up 39% from 2016. And from a compound annual growth rate perspective, they're growing at about 45%. The company is still posting losses, but it does seem like it's leaning on its leadership role in the music streaming industry to turn that around. If I do drill down into those user numbers, the company came out and said its subscriptions are up. That's the paying users are up 46% year over year. The company currently has 71 million subscribers, and the monthly active users, people who are using it every month in the fourth quarter, were listening for 25 hours a month in the fourth quarter. So some strong financials that it seems like the company will be leaning on here as it convinces investors to just buy into this stock. And an interesting point, we finally have the answer of what's going to happen on listing day. Remember, there's no marketed roadshow here. They're not going out and trying to figure out a price or valuation.
Yeah.
It says in this filing that they'll just show up on day one and judge supply and demand and set a price there. So from this point, minimum 15 days until Spotify could list. So we will definitely be paying attention for more clarity on when exactly this stock will begin trading on the New York Stock Exchange.
And we'll come to you for those details when we get them. Alex, in the meantime, you talked us through some of the financials. How does it compare and contrast with, say, Pandora, which we know has been struggling a bit here?
Pandora has been struggling, and Spotify will come out and say their business model is different. They're not as radio-based. In this filing, Spotify is leaning heavily on its data. The fact that it can perfectly cater playlists to users, help them discover more things, and it's also leaning on the fact that it has good relationships with creators. It says it's the best way for creators to make money too. So it's promising that the combination of both the users and the music makers will bring the most folks to the site, and right now they are kind of reigning in the music streaming market.
Just explain to us, Alex, why Spotify's skipping all the sensitive parts of this and going straight to the trading bit, because there's inherent risks associated with that, surely. Explain why they're doing this.
There are risks, and the stock could end up being pretty volatile. Basically, when a company lists, it's for a few reasons. They either want the cash, they want kind of the visibility, or they need to give investors liquidity. We know through our past reporting that Spotify does want to give its existing private holders an opportunity to sell shares, and this direct listing does that. But the company says it doesn't need the money. It doesn't actually need to sell shares itself and make money off of that. So they're choosing this really unique path that established companies just don't take to go through that route. So they still have financial advisors, but they probably won't end up paying them as much as the typical suite of IPO banks. So they'll save a little bit money there. And also, you know, Spotify seems to be known as somebody who likes to do things a little bit differently. So I can tell you that my sources have said that other companies out there in private tech land will be watching this very closely to see if this is a viable option for them to get public as well.
Yeah, nice point. It shows an element of flair, I think, here, and a little bit of confidence. Alex, and I listened to everything you said there about valuation and avoiding that question, but what are the rumors as far as valuation is concerned? Because I'm sure you'll have an idea.
So they clocked their last private value in March of 2016 at about $8.5 billion. Recently, in private transactions, the shares have changed hands at as much as $20 billion. So you can see that there's kind of a discrepancy there. I will be also looking and interested to see what public market investors think they want to pay. If you're an investor coming to the table on listing day, you probably don't want to be paying up at $20 billion. You want to have a little bit of a margin there that you can make some money. But, you know, whether it's the last private round 2 years ago or now, that $12 billion discrepancy seems to be kind of the playground that investors and the company shareholders will look to play in when they're judging this new listing.